Hello and welcome once again to Policy Bazaar. I'm Arjun Bhagat. Now we all know that to drive our cars and bikes on the road, it is mandatory by law to have insurance for them. The companies that offer insurance have increased, and naturally so have the choices and the riders that go with them. And importantly, many of us still don't know that since the insurance regulator de-tariffed the car insurance market, premium prices have dropped by over 40%. That's right, insurers are now offering you better riders and discounts. To help us know more about car insurance, we have Yashish Dhaya with us, co-founder and CEO of Policy Bazaar. Yashish, welcome to the show. My first question, what is car insurance and what does this deregulation of insurance mean?
So car insurance is essentially a contract between the car owner and the general insurance company, that in case something happens to the car, the claim would be settled. The financial burden of that loss, in case an accident happens or something happens to the car, the financial burden is taken on by the insurance company, not the car owner. There are two types here. There's a third-party liability cover, and there is a comprehensive cover. In general, these are the two types of cover. A third-party liability cover is when a liability comes because of a loss caused to a third party. So essentially, you're going on the road, you have an accident with somebody, the person gets hurt, or you hit into somebody's property and the property gets hurt, whether it's a car or an immovable property, and that person essentially sues you or files a claim on you. Now that claim is settled not by you but by the insurance company. That's third-party liability. It's compulsory. You're not allowed to drive without third-party liability, because essentially you're carrying.
And that's perhaps the most commonly asked question. Okay, do we have third-party insurance or not?
If you if you do not have third-party insurance cover, that's a prisonable offense, because you should not be driving. You're carrying a weapon on the road which can destroy property and giving people no recourse to get that money back, because you are limited in means, whereas the damage you cause is unlimited. So clearly that's not allowed anywhere in the world, and specifically in India it's not allowed to do that. Now comes the comprehensive. Comprehensive is when you start covering your own losses. So what else can happen besides third party? And that would automatically include your car, parts of the car which can be covered. It does not include wear and tear. It would not include loss caused because of your own malicious intent or your own being drunk, or if you're drunk and driving and you go and bang into, and if that's proven that you were drunk, it won't be covered. If you are driving through a flooded area and you try the ignition switch too often and the car stalls because of your mistake, again it may not be covered. So there are various mechanisms by which your own mistake you may not get covered, but in most cases you will get covered if you have a comprehensive insurance policy. You will be covered if your car is in transit and gets damaged. You will be covered if you have an accident on the road. You would be covered if there's a theft. You would be covered if there are riots. You would be covered if there's an earthquake. You would be covered if there are floods. In all these situations, you would be covered. You're not covered for normal wear and tear. So if your tires run out of tread, you can't go and say, hey, I want a new tire because I'm insured. So some things are covered and some things are not covered.
Right. Now, that $1 million question that everyone has. How do I get the best discount as far as car insurance is concerned? And there's so many companies now.
Yeah. So see, deregulation did come in, and what that implies is car insurance prices are decided by the insurance company freely, based on market dynamics and based on what they see as the risk of that particular car. So certain car models, certain locations have started getting discounts. Certain professions have started getting discounts. What this has led to, there's a large variance in the prices offered by the different insurance companies. So there are a large number, there are 49 insurance companies in this country, about 20 of them offer car insurance, and all of them would have different prices for different models of car. And what that implies is it makes sense for a customer to go and search once and see what are the prices being offered by all of them, not rely on one.
But that's a pretty cumbersome process.
It isn't actually. It takes you about 1 or 2 minutes. So if you look at a country like the UK, 62% of all car insurance is bought after comparison. So people go to internet websites where they enter all their details, they see a full comparison. When they see that comparison, they choose what is right for them, mostly a brand they are comfortable with the lowest prices and the additional covers that they are comfortable with. and they buy that plan, and after that, they buy it with the insurance company. And that's exactly what's happening in India now. So a larger and larger proportion of people are starting to compare and see what is the lowest price. It's just a mechanism by which your negotiation with various agents is actually replicated by the internet. So it takes you about 1 to 2 minutes, not longer than that. Now, along with this de-tariffication, along with this price difference, the price difference is quite huge. So you can get an insurance for half the price of what you were buying from another company for the same car, for exactly the same cover. In fact, it can be more than half. The discounts can go up to 65%, 55, 65%. So you could even buy it for 1/3 of the price, and that's fine. Now, that is one part of the story. Different companies also offer you different riders. That's the second part of the story. Now, when you have an accident, do you need a 24/7 assistance? Maybe you need to stay overnight at a hotel. Maybe you are driving, maybe I'm traveling and I have an accident somewhere near Shimla and I'm driving all the way to Narkanda, then I need to stop over out there. Now, is that covered? Is my depreciation covered? So, as we all know, cars depreciate. So if I have a claim after the 3rd year, and let's say the car is depreciated by 30%, 30% of the claim would be borne by me and 70% by the insurance company. There are covers out there that have got 0% depreciation, so that you will get 100% of the money. There are covers out there which cover you from no claims bonus. See, we all have no claims bonus. Suppose I have 4 years no claims bonus. I have a single accident, which is not necessarily my fault, but I do make a claim. I lose the no claims bonus discount, which I may be running at 45% or so, or even 50% is possible. Now, I don't want to lose that no claims bonus. So there's no claims bonus protection. In which case, if you have 1 or 2 claims in a year, you still retain your no claims bonus and you still retain the no claims bonus.
So there's
discount.
an added charge as far as these riders are concerned, right?
Yes.
Your basic, whatever you're paying,
yes,
you have to pay a little bit extra to get that extra rider.
So see, if you want to take a very simple way of looking at car insurance now, it's like, you go to buy pizzas. So what they say is the base pizza with the cheese on it can cost you different amounts. So please compare that. There are 20 providers, and everybody offers different toppings. So please select your topping. So now you've got 2 choices. One is to find which is the cheapest pizza, who has which tastes okay, and then which are the toppings you want. And I think it's very important to get into those toppings because some of these are fairly valuable. There are all types of them which do provide you different kinds of covers, as I mentioned.
Now, can you give an example of 2-3 riders which you feel are important for someone to add on to their car insurance?
Yes. So I think the assistance rider is fairly important, both for men and women, but more specifically for women, because without being gender specific, some women don't even know how to get their puncture sorted. Now, if that is the case, you do need a 24/7 assistance to come and your car can stall, and you may be in a place where you don't want to deal with the local public. So you call your 24/7 assistance person, and they come in their cars. They give you get a comfortable peace of mind there, and they repair your car. I think it's a very important cover to have, and specifically for women, or especially for people who are not very comfortable dealing with the local populations. The second cover is the zero depreciation cover, as I mentioned. It protects you. Suppose your car is 5 years old. It has a total loss, or it gets stolen. Now you will only be paid 50%. So if a car replacement happens, you would pay 50% of the price. Now, that's fair because you lost only 50% and you're getting back 100%, but you may not want to pay that. Obviously, you don't want to pay that, and it's not your fault. So to get it restored, or to get a part of it restored, you get the entire amount paid if you have a zero depreciation cover. So it's a cover I would suggest one does take. As I spoke about, there are various covers. There are covers which allow you to get a car during that time, a replacement car. So suppose you have an accident and the car goes away for 15 days. Now if that's your only car, what do? You essentially have to drive around in taxis or whatever else, which will cost you money. There are companies that either give you a lump sum of money at that time or give you a replacement car at that time. You should get those. And similar ones, you will have quite a few of them that do come along, but I think these are the important ones.
Right now, this question is often asked: how do I reduce my premiums? So how does someone do that?
Okay, so there are multiple ways of reducing your premium. One is please shop around and compare and find the lower premium companies. The second is if you are a member of the ARAI, automobile associations, you get certain discounts. If you've driven a car long enough without claims, you get discounts. So if you don't have a claim for 1 year, you get a 20% discount. Second year, you get a 30%, 35% discount. Or by the fourth year, you get a 45%. If you don't have any claims for 5 years, you get a 50% discount. So drive safe, because after 5 years, you will be paying only half the premium that somebody who's, had a claim last year is paying. And do not make claims for everything, because it doesn't help you. You make a 1,000 rupee claim and you lose more than 1,000 rupees on your next year's no claim bonus, right? So make them.
And the premium also goes up.
And the premium goes up because of that. Now the second part is try to take a voluntary excess. If there is a 5,000 rupee cost, you may not want to go through the hassle of getting a claim. If there's a 1 lakh rupee cost, you would go through the hassle of getting a claim. And so why don't you just take a 5,000, 10,000 rupee excess? If you do that, your premium does come down, because the insurance company knows that you're driving safely, because the first 5,000, 10,000 rupees of loss you will take on yourself.
What about the profile of the person, the age of the person, the gender?
So age would determine. Many companies do offer you a discount because of age. So if you are between 35 to 45, you're considered a safe driver. 45 plus is considered an even safer driver. And depending on the number of years you've driven and
so that rashness decreases.
Rashness decreases, your adrenaline levels probably come a bit under control. Between men and women, there can be a difference. Yeah? Certain professions get certain discounts. It's assumed that certain professions in general drive. See, insurance is all about generalizations. A group of people are considered to be having lower risk. So insurance does, some of these professions, defense, doctors are considered to be lower risk, even chartered accountants, and they are given certain professionals are given certain discounts of 5 to 10%. The type of car, and this is very telling. So if you do, and I was very sorry about this, but if you do drive a car which is mostly used as taxis, you will get a higher premium. Now, Honda cities tend to have a much lower premium per price than, let's say, a Tata Indica. The ratios are different. And that's because there are very few Honda cities being driven around as taxis, but a lot of Tata Indicas are being driven around taxis.
So here again we're talking about the whole idea of probabilities.
This all about probability. It's all about what is the chance of an accident. 4x4s tend to have a higher, because they are bigger, they are, so
there is a science behind the pricing. I mean, it may not be exact science, but there is
an increasing science. We're at the very early stages of that science. That science is going to evolve. You've got devices coming into the country very soon, which are pay as you use. Pay as you use, pay how you use, pay how you drive, pay as you drive. Based on number of kilometers, how you speed up, whether you speed up around a curb, how fast you turn.
So as far as these benefits are concerned, then one really needs to ask your agent or really look for them online and then specify that these are the things that I need to be given a discount on, or does it happen automatically?
So if you declare all your information, it happens automatically. So if you go to the, my view is if you go to the comparison sites and you enter all your details, you will see all the options. I think that's the first step. After that, if you're more comfortable buying through an agent, you use that information and you negotiate with your agent.
Now the important question about claims, how does one actually go about getting that claim, and what all do we need to tell the insurance provider?
Okay, so see, claims are going to happen under two kinds of situations. One is you've had an accident. Second is there's been a theft. At least two major types of incidents. So if there's been an accident and there's a collision between somebody else and you, please don't get into an altercation. Don't try to have an argument and don't try to prove who is right and wrong. Do not accept your mistake. It's not the right thing to do in the insurance circumstances, because that is supposed to be done by lawyers. Now, what you do is you note down the driving license number at that point. You make sure it is reported to the police. As long as you are clear you want to make a claim, you make sure it's reported to the police right away. You write down, there will be a surveyor. You inform your insurance company straight after that, or right away. A surveyor will come out. When the surveyor comes out, you give your entire version of facts. Another thing, please make sure you note down the numbers and whatever contact details of any witnesses. So the witnesses can collaborate your story. So when the surveyors do come in, they will check with the witnesses, and that will form the basis of whose mistake was it, who will play the key. Even if it was your mistake, the claim would still be there. So don't worry about that unless you were drunk or you did something which was legally wrong. But otherwise you will get the claim. So do not worry even if it is your mistake. Just put the facts together. Facts being driving license, the car number, make an FIR or inform the police, inform the insurance company. After that they will give you some forms. You will fill that, note the names of the witnesses and go through the process. Do it as soon as possible and you should be quite okay with your claims. Now if you have to take it to a garage, there are two kinds of garages. You can take it to listed garages and you'll get a cashless claim settlement, or you can take it to your preferred garage.
Is that a rider or does that?
No, that is so most companies do offer you cashless settlement at a certain number of garages. So you take it to one of those garages, you get a cashless settlement, so you don't have to pay anything upfront. If you take it to another garage, then you pay and then you recover your bills later, which is a slightly painful process. So I would prefer the cashless mechanism for sure. Now on the other hand, if you have a loss of your car, the first thing you do is you inform the police, then you inform the insurance company. After informing the police with the FIR, you wait 90 days. No point rushing this, nothing's going to happen. You wait 90 days. After 90 days, the police will give you a no trace certificate. You take the no trace certificate, you inform the insurance company. At that point, they should make your claim.
We're going to take a short break, but after the break, Yashish will answer your queries. So do write in to us at ask.policybazaar.com or on Facebook/PolicyBazaar India, or you can tweet us on PolicyBazaar_in. So we'll see you shortly after the break.